Alright, what's up everybody? What's up YouTube? It's the J-Rex here. I was getting a lot of questions in my last video, so I wanted to make this video to help further clarify what I was talking about in my previous video. And that video I'm talking about is when to sell your gold and silver. So a lot of people are asking like, what's the specific price that gold and silver are going to go to? So I mean, I can't determine the exact price it's going to go to, but I can give like a rough idea of where it can go to. Now, the reason why I'm doing this, I want people to know, I want people to have a goal. And that goal is how many ounces of gold and silver do I have to buy? How many, I want people to answer that question. Like, how many ounces of gold and silver do I need to buy? How many do I need to buy for me to be satisfied? Now, everybody has their own goals, everybody has their own desires. So, depending on what you desire, that is your goal. If you want to make $500,000 off of gold and silver, make that your goal. If you want to make $1 million off gold and silver, then buy the amount that will equal to that when the price goes up. So, to clarify, we're going to answer the question. So, just how high will gold and silver prices go? So I'm gonna give a rough estimate so people can have an idea, and then they'll have an idea of how much they should buy to meet their goal. For me, I want to have enough as to where I can open up my own business, pay off my car, pay off my house, and have some leftover money to have fun. So that's my goal. So just, whatever your goal is. So let's begin. Okay. Mm, yeah, I'm a little stressed out, guys. If you can see me taking deep breaths, I'm having real life issues right now. Girl problems. That's a whole nother topic. Ugh, you guys already know how I feel about girls, and they are on the same bullshit like always. Okay, so all right. I hope this helps everybody, and I hope this helps them do well in their financial goals. And I hope I can have a positive influence on people's lives, showing them this stuff. I want to help people, and if I know that I just helped one life, that makes me feel so much better about myself. Just knowing that I helped one person will make me happy. So I want to help anybody that I can. So I hope this helps people that look. But okay, so if we want to get a rough idea, let's start with gold because we measure silver based off gold. So as I said, in case you did not see my last video, the Dow to gold ratio. The gold always catches up to the Dow, the points of the Dow. So whatever the points of the Dow are, gold always catches up to it. To a 1-to-1 ratio, however you say it, it always catches up. So as you can see here, 1929, the gold to Dow ratio, 16 ounces of gold would equal all of the points of the Dow Jones. So back then, 1929, it was 16 ounces of gold equaled all the points of the Dow. And then by 1930, it had fully caught up, and it was 1.94 ounces. Which means that, oh, and then you can see here, 26 ounces of gold for all the points on the Dow, to pretty much a 1-to-1 ratio here, almost 1.29. So what that basically means is if it's a 1-to-1 ratio, if the Dow Jones is 5,000 points, gold is $5,000. So, as you can see here, no matter how out of whack the ratio goes, the Dow to gold ratio, no matter how out of whack it goes, gold always catches up to it. Gold always catches up, and it catches up to the points of the Dow. Those are your opportunities to sell your gold and put it into other things. because that's pretty much when gold reached its top. And that's your chance to sell your gold for maximum profit. So in case anybody, I just want to explain that in case people did not see my last video. So, now let's look at this. So, the current Dow Jones, it's 19,000, 19,800. Okay. So, 19,800. So, as you can see here, in about 1929, when the stock market was at its top, the Dow Jones was about 5,000 points. And then when gold caught up to it, when gold caught up and the Dow Jones crashed, it reached 788 points. Okay. $788 back then was a lot of money. It was a lot of money back then. That's 1920, 1930. So, the stock market crashed. The stock market crashed about, so we're going to divide about 800 divided by 5,000. You get about 0.16%. So after the stock market crashed, 0.16% was left from the maximum, from the top. 0.16% was left. Oh, 16%. When we had a second crash, the second crash was in 1980. Now this is a different scenario because this was an inflationary crash, more of an inflationary crash. This was more of a deflationary crash, but so when we had so the Dow Jones was about 7,500 points. 7,500 points. And then when it crashed, about 2,100. Damn it, stay still, motherfucker. God damn it. Okay. Let me write that down. 7,500. Okay, I guess the bottom. Oh, no, no. Yeah, it was 2,100. Okay. So the second time it crashed, 2,100 divided by 7,500, you get 0.28%. So the second crash, 0.28%, 28% was remaining of the maximum top. So as you can see here, we had about a, oh fuck, we had a 28 take away 16. So we had a 12% increase. So we had a 12% increase. We had a 12% increase of the maximum low. We had a 12% increase from the previous maximum low to the next previous maximum low. So what I'm saying is, like, every time it crashes, the low is higher. So back in 1932, gold would have been worth about 790 bucks. And then in 19, did I say 19? In 1932, gold was about 780 bucks, 790. And then 1980, when gold caught up to the Dow Jones, gold was about $2,000. Holy shit, are you serious? God damn, 2000 was worth a lot more back then. Holy shit. These are your chances to make big opportunity, okay? So, now let's look at the next. See, this one is like much more out of whack. Like, you can see here, like, So the more out of whack the Dow Jones goes, the more out of whack the bottom goes. So what I mean is that, see, as you can see here, as look at this one, the Dow to go ratio. Like I said, the higher the stock market goes, the better gold does. The more it catches up to the Dow Jones. See, crashed here, and then this will crash higher, and then the gold went up higher. And yeah, you can see here it's really high this time. So the next time gold catches up, it's going to be even high, much higher. So we could be looking at 0.5 to 1 Dow or gold to Dow ratio. So what I'm saying here, okay, so let's be conservative. Let's say, what if the next time this crashes? It's gonna crash, The stock market always has to crash. It always has to crash. Gold always has to catch up to the Dow Jones because, like Mike Maloney says, if stock market went up infinitely, there would come a point where the stock market could buy the entire world. So the gold always has to catch up to the Dow Jones, no matter how high the Dow Jones goes. Whether whether gold catches up to the Dow Jones through inflation or deflation, it's going to catch up. So if the stock market is like fucking like 30,000 points, it doesn't really matter because by that point it's like inflation has kicked in so much, like 30,000 Dow Jones points in the future would be worth about 20,000 points of the Dow Jones today. You know what I mean? Because the Dow Jones is like, you measure that in dollars. You measure that in dollars, and it's inflation. So 30,000 points is like worth 20,000 points of today. So, 30,000 points in futures worth 20,000 points today. So chances are okay, well, what I'm saying, back to what I was saying. 16, so let's say the pattern remains constant and the next low is going to be 12% higher than the previous low. Let's add 12 to 28. 40. So let's say the third crash is going to be a 40% uh percent in remaining of the maximum top. Okay, now let's just say the stock market crashed today. Let's say the stock market crashed today and we had this 40% we had a 40% remaining of the top. So 19,800 times 0.40. That's what's remaining. So, if the stock market were to crash today and the pattern would remain constant of lows being 12% higher than the previous lows, the Dow Jones would crash from 19,800 to about 8,000 points. And that would mean gold would be about $8,000. And since the Dow Jones is really out of whack with the gold ratio, next time we'll probably have a 0.5 to 1 ratio correction, because every time the ratio corrects, it doubles. And the last time it was 1 to 1 ratio, so it's going to double. It'll be 0.5 next time. So what you could be looking at, so if it's gold will be worth double the points of the Dow, you multiply that by 2, that's 16,000 motherfucking dollars. Lord have mercy. You gonna be richer than a motherfucker if you got some gold. Like, damn. So you could be looking at, if the stock market was to crash today, you would be looking at $16,000 gold. 1 ounce gold coin, $16,000. Now, the last time when gold and silver prices skyrocketed, silver was about 1/14 the price of gold. Now, considering silver is a lot more rare today than it was in 1980, it should be like much better than a 1/14th the price of gold. We could have silver being 1/10 the price of gold. But let's just, for the sake of being conservative, stay conservative, prepare for the worst case scenario, and let's say the pattern continues and we have a continue to have a silver being 1/14th the price of gold. So divided by 14, boom shakalaka. You're looking at $1,100 silver if the stock market crashed today and we had the Dow Jones to gold ratio correction. Lord have mercy. Holla holla get dollar dollar. So yeah, so there you have it, guys. Now that's if the stock market crashes today. According to Peter Schiff, and it sounds very likely, the government is not going to let the stock market crash. So by the time we have our next crash, what's going to probably happen is the government is probably going to try to intervene again, and they're going to try to prop up the stock market, prop up the Dow Jones, and we could be looking, maybe, I don't know, we'll have to wait and see, but we could be looking at 25,000, 30,000 Dow Jones industrial average. We could be looking at that in the future. I don't know. It depends what the government does. If they decide to do quantitative easing, which is likely, and they decide to pump up the stock market, we could be looking at that. So, $15,000 gold, you could be looking at $30,000 gold in the future if the government decides to keep doing quantitative easing, pumping up the stock market. So there you have it, guys. So I hope that gives people a further look into what the price of gold and silver will be. 16 minutes. So it took about 50 years. Every time we had the gold catch up to the Dow, it took about 50 years. So the last time it happened, it was 1982. So 1982 plus 50, yeah, you could be looking at the year around 2030 when gold and silver prices skyrocket. So I'll be about 40 years old if this pattern continues and we have gold and silver prices skyrocket 50 years later. So I'll be 40. I mean, that's fine with me. I'll still be young. I can still enjoy my money. So 2030, we could be looking at some really high silver gold prices. I don't know. Maybe we might have it a little bit earlier. We'll have it in the year 2027, 2028. We'll have to wait and see. But bottom line is, gold and silver prices are skyrocketing. This is the place to be right now, and you need to invest your money in this market. So I hope this helped everybody. So if the stock market crashed today, you would be looking at, oh my God, I still find this hard to believe. You could be looking at $16,000 gold per ounce, $1,000 silver per ounce, if the pattern remains constant and it continues. But considering how out of whack all this shit is, it could go up even higher, much higher, just because they made the Dow Jones so out of whack. Now gold and silver really have to catch up to measure out all this out of whack shit. I hope this helps you guys. And oh yeah, one more thing. People, I have a feeling somebody's gonna say this. It's like, oh, if gold and silver skyrocket in value, it's not gonna matter because the dollar is gonna be so worthless by that point you won't be able to buy anything. I don't think that's necessarily true because I want to show this. Okay, so in 1980, the average price of a new car was about $7,000. So when gold and silver finally caught up to the Dow Jones and gold and silver prices skyrocketed, you were able to buy a brand new car. Silver was about 50 bucks back then, an ounce. So you could have bought a new car for 100. You could have got a new car for 140 ounces of silver back in 1980. A brand new car for 140 ounces of silver. Okay? See, so No, the inflation thing is not necessarily true because when when silver prices skyrocketed, there was a small window of opportunity where you could buy a car, where you could buy a car with, you know, just 100 ounces of silver, you know? Like, there was that window of opportunity where you could buy cars for dirt cheap with silver. So now, about now, the average price of a new car is about $33,000. So now, $33,000, what, price of silver is about 16 bucks today? Yeah, you would need 2,060 ounces of silver to buy a brand new car today. Like, you see how out of whack it is? Like, yeah, this is totally out of whack. This is ridiculous. Gold and silver have to catch up to balance out this absurdity. So the next time we balance it out, you could be looking at 50 to 100 ounces of silver could buy you a brand new car. You know, like inflation is just so out of whack. Look how, what, a new car's $33,000 today? You could have got a new car for 7,000 bucks back then. Like inflation's gotten so out of whack. And when gold and silver skyrocket, that will be your small window of opportunity to buy a car for dirt cheap with gold and silver. So that's, to answer any questions about inflation. So I hope this video helps. I wish the best to people in investing. Have your keep your hopes high. Silver and gold will skyrocket. The history just proves it over and over. Look at these charts. Like no matter how high the Dow Jones goes, gold always catches up. It always does. Look at it. High, low, high, low, high. There's going to be another low. Gold and silver always catches up. Bottom line. It always does. The government can try to prop up the stock market as much as they can. The goal is going to catch up to that bitch, okay? Whether it be through inflation or deflation. So I hope this video helps, guys. I wish the best to you in your investing. I hope you had a great Christmas. Happy New Year. Thank you for watching, and best of wishes. Peace.